Hello guys and girls, we are looking at ES at the moment, for some people known as the S&P 500. So let's go from the monthly all the way back to 4 hours. So on the monthly, the market structure is bullish, and we are now in the month of July. That tends to be a very quiet month with the month of August. So as you can see, there is not much here. My prediction long term, I mean long term, no, mid-term, price to go around this range, around this area. If I put here, price to retrace around here, supported by the swing high, and fill this fair value gap on the monthly. Now, I don't know if that's going to happen. That is a big move. It might not happen. Now, you have to adjust basically because I'm a day trader, so it's always each day is unique and you have to take it. If I go to the weekly, the market structure is bullish. Now this is a clear consolidation stage. I have a note here: higher swing lows making me bullish some on NQ. Now this is a consolidation market. Let's see how London closes. So I will show you London in a bit. We have a situation now where the previous week high has been taken. So that means that the previous week high has been taken. In this type of market, I shouldn't touch it. You can see the buy side liquidity has been taken. NQ from the other side, Nasdaq, hasn't taken the previous week high. What does it mean? It means that that is a bearish SMT. On top of that, the thing that really concerns me is on this type of market that is consolidating, as soon as you get the buy side or sell side liquidity to be taken, most likely price is not going to keep going towards that direction. Now, because I am bullish in terms of market structure and PD arrays, now price might go bearish. So weekly, what do we see? Market structure is bullish, but from end of May, beginning June, this has been barcoding basically. Daily. Daily shows proper, if I can say in a very positive way, bullish. But this is not proper bullish. By the way, this is intermediate term low now, as we have another swim low. As soon as you have a swim low to the left and a swim low to the right, you have an intermediate term low, and obviously vice versa for intermediate term highs. Now, these are key areas where if they taken, you should be concerned in terms of like your bias might be wrong, you should stay to the sides. But what do you see? Swim low here, a higher swim low and a higher swim low, and these are intermediate term lows, and it's going higher and higher. The swim highs are taken. This is bullish, but if you zoom out a bit, especially from since we started July, I would say this is barcoding. Since we started in July, this has been barcoding. What do I take from this? I think it's a type of market that doesn't give you those home runs, first of all, and secondly, now I find it difficult to find some setups. So now, if I put this in July, we don't have much here. We don't have much. I got my baby, she's crying. Luckily, my wife is taking care of her. I don't know if you guys can hear it, but yeah. So from my point of view is it's a very difficult market, and today I don't like it. I'm going to show you in a minute why. I'm going to show you in a minute why, because I'm going to do one thing. I just want to check my YouTube. I want to see how many people are watching. give me 1 minute. All right, I'm back. So if you guys have any comments, you can always write on the comments. But anyway, let me go back into it. My point I wanted to make is 1 hour drop. Here clearly shows price taking buy side liquidity and start going down. Price might take the sell side liquidity here and we start going up, but I don't expect much from July to give me big moves. So we put a Fibonacci here. That's not the best, I would say, to have a Fibonacci into. I would say if I do this, this is equilibrium. I expect price to take this sell side liquidity and don't keep going down. Now there is nothing guaranteed. Price might keep going down and take this intermediate term low. But if we're bullish, I expect this intermediate term low to be respected. At the same time, we are more in consolidation more than anything else. So I don't expect anything very reliable in terms of market structure moving towards one direction. I expect price to take buy side, sell side liquidity quite easily and moving like in a rangy market. So I don't like this because if we drop one more 1 hour, look at the London Open, it's all the way down. Now, is this going to take the sell side liquidity and start going up? I don't really know. But I don't expect big moves. But let's go to market structure. 4 hours is very clear. We have taken all this buy side liquidity, intermediate term high, and we didn't retrace to take these intermediate term lows around. This was it is an intermediate term low. This you could call it a long term low. You don't need to keep writing everything, but it's good to have like a reference. Now we hit the target that is a previous week high. That was on Friday, and this is the week. So if you see the yellow lines is the weekend. So this was the high of last week, and we taken it. Now by taking that, in this type of market, we are done, objective taken. Now we could just barcoding today and tomorrow. Nothing is guaranteed, obviously, but if we look at the news are very important also. It's good to understand what are the news. So we had news at 8:30. There are not any major news today. Tomorrow we will have news at 10 a.m. Fridays are a very tricky days. I prefer to trade Fridays when there are high impact news, or at least orange news, to be able to take some trades. So my point is that the week is kind of over. It's kind of over, if I have to be honest with you. I don't see much going on here. I don't like what I'm seeing, and price will have to show me something. Now, am I going to take a trade? Well, if I see something, I might take a trade on my prop firm account. So I'm going to wait for the opening 9:30 and see what the market tells us. But this is a sign that I would like to see a shift in market structure to the bullish side. But you can clearly see it happen here, and after we start retracing, obviously it's a different time of the day. Now, by not taking this low, it's a bit concerning. But yeah, today is a low probability. I am not very excited, and I'm going to be very cautious. I will risk $250 per trade, 2 bullets, and that's it if things don't go well. Hopefully the first trade I take, it goes well. But first of all, the most important thing is I have to be very cautious with my language, because you can't say the first trade I take, well, if the market gives me the right setup, I will take a trade. So that's the important thing to understand on those type of aspects. So I always try to be cautious with my language, and when I write on my diary, or when I'm trying to um, journal on it. So I do have my account. I'm going to check one thing. Give me 1 minute. Yeah, I got my account here. $500 maximum to risk if I take trades. So I have to look for the right setup. So yeah, I would like to go for longs, but I will be very, 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 very cautious. So maybe price goes up here and keeps going down, but yeah, somewhere around equilibrium will be um, will be the right place. So my view is, guys, be cautious. Anything else I can share with you guys? Well, I would say that where the money is, the way I trade and everything, is by being patient and wait for that high probability setup. When you see everything is aligned, it doesn't need to be everything perfectly aligned, because that is very rare, but clearly in markets that gives you those good moves. Also, times of the year help a lot, because you don't expect very nice moves on summertime, July, August. It's kind of the worst time to trade, to be honest. So if I look at this, excuse me, got hay fever, really bad here in the UK. May, sorry, April to May. I mean, it was the whole month of April and nearly whole month of May. It's just going long. I mean, this was crazy. You didn't even need to catch maybe the first week you missed, but like once you start seeing this, especially here and this week, and here you have to be cautious. Like we keep going, taking all-time highs, but you have to keep going with it. It was a really, I would say, easy way to trade it. Um, it wasn't like perfect and super easy, but like compare that with this, it feels like we are trading something completely different at the moment. It's just very frustrating. Now, I want to look for longs. I won't take any shorts, because shorts might shut up here. They will shut down here, most likely. And so I will be going against my own bias, and obviously the bias is not even clear, and it will be breaking rules. So I have a rule that if the market structure is not aligned in all the relevant time frames, when I mean relevant time frames is from 4 hour all the way to the monthly, when that thing is not aligned, you have to be very cautious. And if the market is going against the long-term trend that is bullish always for S&P and Nasdaq, is always bullish, kind of, yeah, basically you don't take a trade. The only exception would be, that is something that I need more back testing, if for example we have a move, a clear bearish move on 4 hour, and daily is aligned with the 4 hour, and we have a clear target on the sell side liquidity of a very strong high time frame PDRA, like weekly or monthly, and that's clearly the target because it's just around equilibrium, for example, or discount, just starting of this kind of area. That's where you can start looking for shorts. I don't have enough data of that, but you have to be very cautious on those situations, like you're going against the weekly and the monthly, and be very cautious. So when it's not all aligned and you're going against the long-term bias, I stay away unless it's something super clear and I know where are we going. And even though like that, I'm thinking not even to take those trades. I'm losing long term taking shorts, and I'm winning obviously taking long trades. I mean, if you look at my stats, well, I don't want to show much. No, I won't show all my stats, but um, I'm I mean, I'm up like $600 longs and I'm down $154 on shorts. That is for my cash account, obviously. There's no like a prop firm or anything like that. So the point I wanted to make is this has helped me now a lot when to risk more or when to risk less or when not to take a trade. I don't see everything black and white because the market is very dynamic, right? So you can't just expect everything to be perfect. So for me, perfect kind of like highest risk will be when everything is aligned and we have a clear bias that is following that long-term view. Like for example, 4 hour all the way to monthly is all aligned to the bullish side. And when we do the review for the day trading, we have a situation where it is a clear entry to the bullish side. We have a clear target that will be the maximum risk. Now from there we have a different variety of different type of market structures that I don't have enough data, but one that is very clear, as I say, is when it's not all aligned and the trade is going against the long-term bias and it's not that clear, so you stay away. So that is one of the things. I'm just having a look into it. When not all time frames are aligned in the market structure and there is no clear bias. So it's not even like going short, is when it's not all aligned and there is not a clear bias. So in this case, if I look into this, it's all aligned, just buy. Is all market structure aligned? Yes. 1 hour I don't consider it, but is all market structure aligned from 4 hour onwards? Yes. So it's tradable, but I don't really like it. Now I say when there is no clear bias. That is a lot of interpretation because when there is no clear bias, it's a bit dangerous. Because I like to be very specific and you follow kind of like certain type of rules that they're black and white. Now you can't do that all the time because being discretionary is where I start making the money. And the market is very dynamic and from there you need to make adjustments that if you don't have a rule that is A, B, C, D, and I do that and I start making money and I make a living out of it, you can't do that. There is certain rules that they're black and white, but you don't get all aligned. They're very complex days. They're days that are borderline. They're days where you have to assess based on your own judgment and on your experience based on the structure of the market. But for example, market structure is a black and white thing. Like if everything is aligned and you see a clear entry to the bullish side and everything is aligned to the bullish side, you're in a position of a very high probability trade. Now that doesn't mean that when it's not all aligned you cannot take any trades, and that doesn't mean when all is aligned that means you're going to print money. So it's a bit unique, you know. You have to have certain situations, like for example trading the day before NFP or CPI. Well, most likely you're going to get very bad price action, but sometimes you might make money. But like having these rules help a lot to increase the probability, but where you make the real money is by making your own decisions based on judgment, based on what you see on that day, and having the experience, a bit of rules. But at the end, you have to take that trade. It's not always that easy, or it's not always something super repetitive that is like clear. You don't even need to think. You have to do the analysis, and each stage you have to take it as if it's unique, and you put all the effort to make the most of it. That's what I'm trying to say. So the other things, I mean, I implemented these rules that give me a lot of structure. Uh, this is one rule that I don't have enough data, but this is when not all time frames are aligned in the market structure, and there is a very clear bias that goes against long term. So obviously I have risked less money in this trade. My view is, excuse me, my view is I don't have enough data of this. I can't just come and tell you, well, I have enough data. No, I don't. So I don't. So I just want to see trades that I want to do a quick review, guys. Now we are here, 15 minutes for the market to open. So 9th of July, it wasn't all aligned, right? We took the intermediate term low. So you could see that 9th of July, the bias wasn't very clear to me. Now, this is bullish already. It's borderline, to be honest. For me, it's borderline. Are we going to take this buy side liquidity? Yeah, it looks like most likely that we did take it. It was on Friday. So my view is I got a bit lucky. I remember that day that I entered at the low of these bullish engulfing candles, and when price nearly took the low of the bullish engulfing candle, after I just took the profit. Now, my point is I'm trying to simplify something that it cannot be simplified that easily. The way I see trading is like a puzzle, and you have to put all the pieces together and trying to find what is the most likely outcome. Now, you will never get all the pieces or all the information in the market because there is always things that they are out of your control, like news or manipulation, certain things that you're not even aware that is going to happen or is even happening at the moment. And there's so many factors. Apart from those factors, technical analysis doesn't mean it's 100% guaranteed. If it was that easy, like I think this will be done by lots more people, and it might not even work. But because it's not accurate, you lose certain times, you win other times. It's all about the odds and how you you just push to the maximum your profits and reduce your losses to the minimum. My point here is that I put 9th of July in the category of not all time frames market structure were aligned and was not a clear bias. Well, 4 hour nearly was aligned with everything, but let's say that is true and the bias wasn't that clear. And I did take some shorts, I believe, on the 9th of July. If I have a look, 9th of July, I went long all the time. Okay, that's fine. Yeah, that's fine. I went long all the time. Obviously, I'm happy. I didn't just keep changing my mind. Today I'm long. only longs. So that's the thing. If we look at the other trades, let me see other trades that I've done. 8th of July. 8th of July. Yeah, clearly it's not all aligned. We took the intermediate term low and here it's not. This is a clear not all market structure is aligned. Now the bias, I don't want to go in detail into it, but like um that's fine. That's fine, that one. Okay. And the last one, apart from the 8th of July, 7th of July, but it's like testing trade. I understand 7th of July, I was testing and I remember that day. So it's just, you cannot come and say that, yeah. I have a comment that was all aligned and but there wasn't a clear bias. So that is very important. So there is no clear bias. And I put my own rules, but I don't have data because this is the only one I have data, only one day. When all time frames are aligned and bias is not very clear, reach the minimum for the day or do not take a trade. So that's what I wrote. Yeah, I will say take profit here. This will be the maximum. I want to take a quick break before we open. Guys, going to take a quick trade, okay? A quick break, sorry. So let me do a few things. I want to see how Nasdaq is doing. Yeah, Nasdaq is also retracing. Yeah. Look at 4 hour. Yeah, I will look for bullish. I mean, yeah, this could be a clear TP here. I want to mark certain areas. 15-minute for value up. 5-minute. This could be the stop edge here. Yeah, we'll reach 250. So if you do like buy limit and you do like this, you put something like this, you always need to go to the most reliable things. Yeah, this is very risky. I take the risk. Whatever happens, happens. 15 minutes, 5 minutes. All right, quick break. Less than 5 minutes. Alright guys, I'm back. So the way I see it, I could get lucky, but this is a market I don't like that much. It could easily, price could easily go the way down. Yeah, as long as we respect. Yeah, we got a bullish SMT now. I'm looking at ES with NQ. Got a bullish SMT. If I show you here, this is NQ and at the bottom is ES. You could see NQ took the lows of Wednesday 10 a.m. 4-hour candle, and ES did not take the low of the 4-hour candle of Wednesday at 10 a.m. Now that creates a bullish SMT. All right, so 5 minutes to go, guys. 5 minutes. Okay. I'm looking at the higher time frames. It's always good to see 4-hour, 1 hour. And to be honest, it looks like we might do that uh, retracement. Not a full reversal, but we could retrace to the equilibrium of the fair value, so to the Fibonacci from the last move, and after keep going down. I hope that happens. If that doesn't happen, well, I'm willing to take that loss. Yeah. 3 minutes, guys. 3 minutes. Is anyone watching the World Cup? Because Spain, my country, we're going to play the final this Sunday versus Argentina. Argentina. So I expect Spain to win. And why? Because we are the most solid team in the whole World Cup. We have the best defense, and we have a solid style that make us very strong. Argentina has been suffering match after match, having some weaknesses. Spain doesn't show many flaws, to be honest. They play very well compact, very solid, and we have good strikers because Jamal, and we've been doing very well. So I believe we will win the final of the World Cup. Now, let's see if price give us that entry. This is ambitious, but because 930 makes huge moves sometimes. If we go 5 minute, Yeah, this is a bullish engulfing candle. Put the stop loss very safe, very safe, I would say. Okay, 30 seconds, guys. See, well, that's not what I wanted to see. Once we hit this area, I'm out. That is annoying. That is annoying. We cannot go into the direction I said we were going. Now, like, oh, fucking hell, man. It's just annoying. Fucking hell. It takes my energy. Going to put an alarm. Going to say, you know what? This is touch, I'm out. What happened? The computer just screen went off. If we touch there, I'm out. I just can't. I can't keep watching this. Annoying. Okay. I'm not very sure about that move. there is a high probability we go to my entry, and after that I might lose, but it is what it is. It is what it is. I take it if we don't even barely touch it, well, get very close to we don't touch the entry and have to go up. Very close. Very close. That could happen, and I take responsibility for that. Oof, that was the entry. How the fuck you didn't enter that? It touched my... Oh, now I understand. I didn't press the buy, now I understand. No, I might lose now. Wish me luck, guys. Wish me luck. So I go 7. I will sell manually something here. We will sell 3 around here. I mean, what are the odds? Yeah, we sell something there. Okay. Now we have to watch, guys. I don't know if I can modify this. It will be the easiest. No, you can't fucking modify this shit. You can't modify this.